Well, March was an exciting month for the stock market, the economy, banks. Let's not forget that. The NASDAQ went up 6.7% in March, give or take. S&P was up 3.5%. The Fed raised rates 25 basis points. I don't know if that was the right move, the wrong move. I think they pulled back a little bit in terms of what they were expecting to do. And a lot of people think it was a reaction to the banks failing, Silicon Valley Bank, some other banks failing. But guys, I want to make note of how quickly news can change. 6 weeks ago, were we even talking about banks failing? Not even close. Now, all of a sudden, then mid-March rolls around, all of a sudden banks are failing. This is the start of something big. And now, let's go to Market Watch right now. Let's look at the top news stories. I do not see anything having to do with banks failing in the top. UBS will slash, not banks failing. I don't see anything about banks failing on a number one news source. And 2 weeks ago, we had one of the top 20 banks in the country fail completely. Do you guys see what I'm saying? If you're new to the channel, what I'm trying to say is people react to news so quickly, it's the world, it's ending, or everything is great. You look at Tesla. Tesla reported this weekend the number of cars they delivered in the first quarter. They didn't hit the number by like 1,000 units. And all of a sudden the stock is down 4.5%, 5% today. You have to think about these things. I want you to remember that when people react to news, they are usually overreacting on the positive and the negative. Is the world really falling? No, probably not. If you go look at the last 25 years of stock market, the last 25 years of the S&P, this is what the chart looks like. Like this, like this, like this, okay? This is where news was worst in the last 25 years. And this is where you wanted to buy. Now, does that mean when Silicon Valley Bank is failing that you should buy all banks? I'm not saying that. What I'm saying is if you understand long-term investing and you understand the U.S. economy and you look at an index like the S&P like I just showed you, when things are looking their worst, that's when you get the best opportunities because news follows where stocks go, not the other way around. Not the other way around. My prime example, look at COVID. I was criticized for saying COVID didn't cause that crash. People are like, you're crazy. That was a spark. Because think about it this way. From February 19th to March 23rd, the market fell 40%, right? On March 23rd, we have 5,000, I believe we had 5,000 cases of COVID in the US. Okay. If COVID was really the worst thing in the world and what the world was going to shut down, how did all of a sudden stocks skyrocket from there and we went to 200 million cases or whatever the number ended up being? That doesn't make any sense to me. This should have been way worse. If I told you on this date the market's down 40% and we're going to go from 5,000, let's say this was 50,000 cases. I don't care. We went to hundreds of millions of cases in the US. People getting it multiple times. Why didn't the market go even further down? It went straight up from here and went to record highs and beat those record highs by almost 50%. That's what I'm talking about. When I look at a month recap for March, I'm looking at saying there's a lot of stuff that's happened. A lot of good stuff, a lot of bad stuff. Just today, this is April now, but just today, manufacturing came in bad for the 5th month in a row. What does that mean? I don't look at any of that saying, oh my God, I got to do something. I just look at it and say, okay, well, we've had a booming economy for a very long time. Maybe this is the start of something. The yield curves are inverted, which means people perceive the short term to be more risky than the long term. That's usually an indication of an upcoming recession. Okay. But if you're a smart investor who understands that low prices are your friend, you are going to do very well with it. Why would you not want lower prices? I literally root on lower prices. I literally hope the companies that I want and the stock market that I want is going to go lower at all times. So if this makes sense to you, please subscribe to the channel. And if you know somebody who overreacts emotionally, you need to send this video to them. Just don't write in the video like, hey, you overreact emotionally, please watch this. Because it does take time to get acclimated to this kind of mentality. It took me time, but slowly and surely, I started to realize, wait a second. The world didn't fall apart. The U.S. economy kept growing. The world economy kept growing, and stocks eventually went up. What drove everything? Fundamentals and valuation. That's what drives everything. So, as prices fall, these have not fallen. When you look at fundamentals and valuation, you have to look at where we stand relative to history in terms of valuation. And right now, the S&P is still very much overpriced. And watch for a video coming out this week where I talk about fair value on the S&P. Based on history going back to 1929, we're just overpriced by a lot. And it takes some time to get through that. But eventually, valuations will matter. And when they do matter, they will matter with a vengeance. And all of a sudden, people will say, I need value. That's just the way it is. There's a recent Forbes, the cover of Forbes had a value investor who said, hey, I think we're starting to get into value being important again. Maybe. I don't know. To me, valuation's always important. I would rather be out of the stock market, have my money sitting in 90-day treasuries making me 4.5% than to buy a company hoping and praying that it goes up. That is called speculation. But when you buy a company, when you buy a stock, you're buying a piece of a business. When you buy the S&P, you're buying a piece of the U.S. economy. So what you're saying, and if you buy a piece of the S&P today, even though you might see a big drop in the next couple of years, my guess is 30 years from now, you're gonna have a gain on that investment. Will the gain be reasonable to justify I don't know. What's reasonable to you? I don't think you can expect to buy today and expect a 20-year return of 10 or 11% or 9%. But if you buy religiously every single month, every single week, whatever you decide to do, if you keep buying religiously, guess what's going to happen? You're going to overpay sometimes and you're going to underpay sometimes. This is value. This is pricing. You're going to overpay. You're going to underpay. But what are you going to average? Right here in the middle. And you're going to beat 99% of actively managed mutual funds, or 98% of them, that are run by all these Harvard MBAs who think they're so smart. Guys, this is what I want to teach in this channel. I say it all the time. 2 years ago, people were talking so much smack to me, and we've only gone down 20%, and the smack talking has really decreased. Guys, I think the S&P is going way lower than it is today. Way lower. Low 2000s or high teens. You might think that's crazy. I just look at history. That's just based on history. I'm not making this stuff up. I'm not sitting there saying, I'm not this insurance salesman out there going, I think stocks are overvalued. I think they're going to go down. Well, why? Well, they've just gone up for so long. Well, that's not a reason for a stock to go down. 82 to 92, stocks went up basically straight up except for a big crash, and 92 to 2000 because valuations were still okay. I look at valuations. At some point, valuations matter. Go back to 2000. Look how many companies are at or below their 2000 stock price, even though their revenue and profits up 2, 3, 4 times. Why? Massive overvaluation in 2000. And if you don't get that, please stick to buying low-cost ETFs. Because when you buy a stock, you're buying a piece of a business. And if you can't value that business, that's okay. You can still do really, really well in investing by doing this. But please stop worrying about what the Fed is doing today and tomorrow and next month and everything. It does not matter in the long run. The Fed's job is full employment and stable prices. That is their job. Fed Chairman Powell got attacked by all these idiots in the Senate and the House. Literal morons. One lady didn't even know Bernanke's name. Come on. These are all morons asking stupid questions for their own agenda. Does it suck that unemployment could go to 5.5%, 6% at the end of this or higher? Absolutely. Does it suck for the 2 or 3 million people who will lose their jobs? Absolutely. But you know what'll suck worse? Everybody in this country having 7, 8, 9, 10% inflation. That is bad. And that's what I love that that Powell said to the committee. It's like, listen, this is way worse to have high inflation for all these working class families. That is way worse than having a couple million people lose their jobs because they're not losing their jobs forever. So again, I remind you, March was a great month in the markets. We had banks failing and the market still went up a huge percentage. Explain that to me. To me, that shows we're not done with the euphoria yet. Oh, thank God. Everything that happens. This is the way it goes with crashes. Sorry. Ready? They peak, then they go like this. That's what they do. You get, oh, we're good. Oh no, oh, we're good. We need to suck people back in over and over. You need to keep sucking people back in. And then eventually we'll get to a point where people are saying, I hate stocks, it's done. And you know who those people are? All those crypto enthusiasts. All those idiots out there who believe that some digital token is going to take over the US dollar. When all it takes is the US government saying, banned. But that's the market we're in. You might sit there and say, Paul, what does crypto have to do with stocks? It's not about crypto and stocks. By the way, Bitcoin hit 67, 70,000. The market went down 20%. Bitcoin is supposed to be a hedge. It was down 60%. It's still down over 50% since that peak. Worse than the NASDAQ. But to me, crypto being around tells me how euphoric and crazy and stupid this market is. Just look at the people, everyday people who love crypto. That's your indication. That is your indication. I literally don't know a single crypto enthusiast that I respect as an investor. I literally think they're all stupid. And that's going out to people that I'm friends with. And they choose not to be friends with me anymore, I'm fine with that. Because they are stupid for believing in crypto. And this all has to play out in some way. So guys, if you like this, again, subscribe to the channel, share this with somebody, and share this with a crypto enthusiast friend of yours, and just write to them, this guy thinks you're stupid. And I can't wait for the comments below. Thank you very much.